Good afternoon. Brandon Richoux, and today we're going to be doing a presentation on interest rate forecasting. And what we got to do was take a week in sample at the end of October and look at interest rates and look at current news and take that current news and put it into a interest rate forecast and also do the yield curve for the past week. So continuing on here, the first thing that we're going to talk about is just kind of an overview of the week and the things that took place this week. First of all, the yield curve is steepening, and that's a common theme that you'll see throughout the week, with some days of the week being less than others. But in relation to the current news, the yield curve steepening continues throughout the week. Also, this is some of the current news that we're going to focus on throughout the week. One is the Fed's tapering, and that is where most of the current news centralizes throughout this week. Also, dovish views on inflation and unemployment. Unemployment will also be further discussed in regards to the Fed's tapering. And continuing on here, the market is already starting to adjust and get ahead of the Fed's tapering. So continuing on, this is the overview of the week from Friday to Monday, and clearly you can see here, all the way from year 1 to 30, the yield curve is steepening throughout. And then also with the interest rate forecast, you can see that Friday in blue is higher than the Monday in the red, which means interest rates are higher all the way throughout, which isn't good for home buyers and home builders. But now let's just take individual days and take the news that is here. First of all, in Tuesday's news, tapering has actually been delayed, which means that the government has actually delayed when they're going to begin to taper. So this was good for investors, and they got actually a little excited about this news. And 10-year treasuries dropped by 4 basis points. And that's evidenced here in Tuesday's yield curve. You can see there's not much action other than at the 10-year mark where the 10-year treasury drops underneath. And then in Wednesday's news, Wednesday was a little bit more eventful, and it came out with actually some pretty incredible news. Treasury announced their first new security in 17 years, and that is the floating rate note. And also, Fed promised that they would keep their federal funds rate down longer than expected. And continuing on, news on dovish views on short-term interest rates continue to reiterate their stance. And we can see this in the interest rates. In about year 10, you can see that Wednesdays was higher, and also in about year 15 to 20, you see the interest rates were higher as well. So news of the Fed and the things continuing on with the dovish views began to increase these interest rates as well. Now Thursday was kind of a boring day, but I included both graphs after this, the interest rate and the yield curve, because it's important to see, as compared to the other days, there's actually no change when all the other days did change. So interest rates fell slightly on Thursday as the yield curve began to flatten just a little bit. There's not too much action, like I said, but I included both graphs so you could see that. See in the yield curve here, you see a slight flattening on Thursday, but not very much. And then also here in the interest rate forecast, there's very little variation, and this is different than the other week, so that's why it's included. So completely the opposite of Thursday's news, Friday's news was completely jam-packed with lots of different news. And the biggest thing was that treasuries dropped the most in 4 months following a report that the Fed will begin to taper as soon as December. And this is because higher employment was reported. Several weeks ago, the Fed said that they would begin to taper as soon as the economy started to stabilize. And higher employment means that the economy is starting to stabilize. So as this continues and this trend occurs, more and more will the Fed seem like that time limit is coming up and they will begin to start tapering. And as you can see here, clearly because the Fed should be tapering sooner than expected, we're going to be seeing that Friday and at the end of the week the interest rates have increased because that tapering is so much sooner to happen. And then also the yield curve steepens all the way across on Friday, and again that's the general trend for the week. So in conclusion, we can see that as it gets closer to the time that the Fed decides to taper, that interest rates will continue to increase as long with the yield curve steepening as well. And also we've seen this, that the market is already compensating for when the Fed will begin tapering. And as our economy continues to stabilize and continues to just regain its strength, all of these things will continue in that trend. Thank you for your time. I hope that this was informative and well. So thank you.